What's up, YouTube and all my investors out there? Let's talk about what's happening with Ashford Hospitality Trust, AHT ticker. It has fallen more than 29% after announcement of a 1-for-10 reverse stock split. Now, before we go any further, I'm going to give my thoughts on how a reverse split is good, but also know I have not owned any shares of AHT, but I did acquire a little bit at about when it fell down to, it was at 274. I think I grabbed about $1,000 worth of shares on it. So my thoughts on reverse splits: some funds can't hold stocks below $5, and some brokers prohibit or charge higher costs to margin sub $5 stocks. And then the $2.50 option strike increments on AHT is far from ideal. Me, as I trade options, I wouldn't want to trade it. But this makes it more appealing now to the eye. So most traders' commissions are based on number of shares options, so a higher stock price can lower percent cost. Now remember, I'm not a professional. This should be considered entertainment use only. Before you buy or sell any asset, you consult with a professional, or hell, don't be lazy. Look at some charts, read some articles, listen to some random people on YouTube. Okay. So, Hospitality Trust, a real estate investment trust. Ashford announced a 1-for-10 reverse stock split after market closed July 2nd. What that means is for every 10 shares investors owns, they will instead have 1 share, thereby reducing the existing share count. So if you own 1,000 shares of Ashford, you'll own 100 shares once the split occurs. The split doesn't change the value of the company, but will increase the share price. Ashford CEO Rob Hayes said on Twitter that the company is doing the split because some funds can't hold stocks that trade below $5. Prior to that announcement of the split, Ashford traded below $4 per share. Hayes also essentially said that the lower price share is not ideal for trading conditions, which is true, it's not. But yeah, you guys, we took a huge hit today. That was just straight. What is that? We call that butter right there when you just come open and just drop straight down. Now what? While reverse stock splits are not necessarily bad, the market usually does not take too kindly to them because they may suggest the company doesn't think it can get its share price up on its own. This is now the second reverse stock split Ashford has done within the last year, and the company has spent most of the last year trading below $5 per share. So it is certainly concerning. And like I said, I already started adding a little bit, but where I want this one to come is actually a little bit lower, which would be right here, where it's already here at this key level of support, but that I don't think that's going to hold up very well. So the next level of support is going to be all the way down here. Now if there's some way it's able to hold on top of this key level of support right here, which, like I said, I'm about to actually load up on. Like, if you're already long term on this one and it does get lowered, don't panic sell. Just think of it as a time to, add into your portfolio, add to your position at a lower cost to average down. But RSI is way oversold. We're down here at like 6. That's way oversold. So I don't see you going any more than that. So, well, that's all I got for you guys. I'm going to keep watching this one. I'm pretty sure it's going to be selling off for a little bit longer because you can see we are on this downward trend still, and we're going to end up busting through this level of support right here. And it's gonna end up getting pretty bad. Anytime I've been a part of one reverse split, and it wasn't well. It took quite a while for the company to recover. But like I said, I'm not a financial advisor at all. This should be considered entertainment use only. This is your first time tuning in, smash that like and consider subscribing to my channel. I am out of here.